So, 2018 was not as we expected. It didn't play out the way that it was promised. But filled with fresh optimism and newfound determination, could 2019 be the year that cryptocurrencies make a comeback? Well, it's certainly possible and certainly something I hope for, but I'd rather not leave things to chance. Rather than make bold predictions, I'd rather focus on practical solutions on how to make money in this space without having to rely on the market going back to 2017 highs. I'd like to be diversified in my approach so that I plan for the worst but hope for the best. But in the meantime, let's talk about what we can do today. Welcome to Ready Set Crypto. This is your brain on blockchain. So, as we begin 2019, I think it's no secret at this point that the trend I am seeing and what I'm betting on is that STOs, or security token offerings, will replace ICOs as the de facto capital formation vehicle in the cryptocurrency space. Now, that being said, the big caveat I have to impress upon people is that it's probably 2015 or 2016 with regard to STOs. There's still a lot of infrastructure work that needs to be done, but you can either see that as a challenge today or an opportunity for tomorrow. While utility tokens are far from dead, what the industry has now realized is that few of these token economic models actually made sense in terms of long-term value capture. So we're seeing a lot of projects starting to look into launching STOs or restructuring their ICOs as STOs. I mean, if we look at the ICO and why it was such a big deal in 2017, it's because it tried to disrupt Wall Street and the traditional capital formation process. But the stock market is no stranger to disruption. But one of the examples most used to explain public blockchains and ICOs' potential impact on the stock market is not really related to the stock market at all. It's Napster, the internet-based peer-to-peer file sharing service launched almost 20 years ago. While it's widely seen as a music pirating service, it introduced a technology that has revolutionized how music is distributed and purchased. So in the same way, the 2017 ICO Blitz has been described as blockchain's Napster moment. Investors in the media often focus on the scams and the hype and the losses suffered by the over-optimistic cryptocurrency investors. But what sometimes gets lost in the discussion is the unbelievable technology that was being applied to enable small teams, sometimes with very little capital, to conduct a global offering. So if you want to think about this shift like that, ICOs are the Napster of capital formation, whereas STOs are going to be more like the Spotify or the Apple Music. They're going to share the underlying technology, but the latter is going to be done more compliantly and in a manner that is more participatory to the legacy financial systems. Essentially, the shift from utility tokens to security tokens enables these tokens to act as representation for real-world assets, including ownership rights and the rights to a dividend stream from a company. This is going to be extremely disruptive in the private equity space, where much of the trading is done on paper and by a literal middleman. Quite simply, the less frequently an instrument trades, the more likely they are to find their way into a blockchain-based trading system. This will also open up a pool of global liquidity that the private equity market has never seen. So hopefully you're as excited about STOs as I am. But of course, the next question is, how do I get started? What do I do to take advantage of this upcoming trend in the crypto space? Well, you could try to do all the research on your own. If you want to talk about one potential benefit of the ICO market, it's that it taught us to think like VCs and how to evaluate projects. But the problem still persists that there's going to be a lot of different projects out there, and this stuff can be pretty complicated. So to that end, I've set up an insider group devoted strictly to STO research, where we're going to be helping each other do the analysis, compare notes, and ultimately decide what are the best STO projects to invest in. Not to mention, this is all built around a class as well, so it'll help you to continue to understand what STOs are and how to invest in them. So if you're interested in joining the SEO Insider Group, the link is in the description below. Just like email and digital photos, digital securities are transformative. So let's play out a scenario. Let's say you're a property developer and you have a bunch of buildings. And let's say you decide to tokenize them. Now, not only can you make a bet on your individual assets, but you can use technologies to very quickly create micro ETFs. SET protocol is one such technology that would enable you to do that. Using SET, you could bundle together ERC20 tokens and create a token to represent that bundle. The bundle is essentially an ETF. Now you could have entire neighborhoods represented by ETFs. Using the DYDX exchange, you could quickly set up synthetic derivatives on top of your ETFs, allowing you to go short or long based on your preferences. Now what's cool is that SET is already functioning, and there are sites like tokensets.com which will bundle together small sets of similar tokens. For example, you could spread out your risk by investing in the ETHX set, which is a set of the top 10 ERC20 tokens. Or you could invest in the DEX set, which invests in the major decentralized exchange protocol tokens. Or how about the stable set, which helps cover your risk when parking your capital in case a certain stablecoin becomes insolvent. And what's cool is that Ethereum is going to be the backbone of all this. While Constantinople has been delayed due to a potential security vulnerability, I still think that Ethereum is making big changes and will be central to a lot of the different ways that I'm looking to make money in 2019. Also under consideration are actually useful projects like MakerDAO. Most notably is Maker's decentralized stablecoin named DAI. DAI is an Ethereum ERC20 token that is pegged to the US dollar. DAI is simply a loan against Ethereum. Anyone can create DAI. All that's needed is Ethereum and the technical know-how to use a decentralized app. But hopefully it's clear that DAI is a loan against Ethereum. And really, DAI is a masterpiece of game theory that carefully balances economic incentives in the pursuit of one goal, a token that is continuously approaching the value of $1. So of course your question is, well, why is DAI so special? And furthermore, how do I make money off of a stablecoin? First off, regarding the value of DAI, what we've needed in the crypto space is a provably solvent and transparent stablecoin that actually works. As we've seen over the past couple months, the further that DAI goes from $1 in valuation, the more incentive there is to fix it. That's the real magic of DAI. Now regarding how to make money off of it, that's where we've seen the rise of decentralized credit networks. Over the past year, we've seen the tools necessary to facilitate collateralized loans, social credit, and open finance be fine-tuned and proven to work. I think 2019 will be when they scale up and start to serve the sort of users they were envisioned for. Global citizens who've been excluded by the current financial system. Crypto debt networks and credit networks will be bolstered by the growth of projects like Dharma Protocol, Geo, Nexo, and MakerDAO. Multi-collateral DAI in particular is something that I'm excited about, and we'll see wide applications in 2019. 2018 was all about collateralizing Ethereum, but in 2019, Maker will accept Bitcoin, other ERC20 tokens, and other crypto and non-crypto assets. But again, how do I make money off of DAI? Well, one such method is Compound, which is multi-collateral and lets you earn interest on deposits. In December, I was making around 18% on my DAI investment. So instead of just parking your capital in stablecoins while you wait for a market bottom, you could earn interest while you do so. And let's look at it from the opposite perspective. The interest rates are crazy low on some of these assets. Back in October, Maker announced their CDP portal for single collateralized DAI. A CDP portal, or collateralized debt position portal, is a dApp where you can interact with the permissionless smart contracts constituting the DAI credit system, such as opening and managing your collateralized debt positions. So I was borrowing DAI from a collateralized debt position at 2.5% on the cdp.makerdao.com site and lending it back to Compound at 18%. In a sense, having your cake and eating it too. Of course, it's not as profitable now as it was then, but even the current rate of DAI lending, about 4% at the time of recording, still lets you beat inflation for a stable asset. What also interests me, pun intended, is how MakerDAO and Compound has essentially let us turn retail banking into a series of internet protocols. Full transparency and solvency is built into the code. I doubt many retail banks see what's on the horizon. Now that we've covered stablecoins, I want to look at private trust management markets, specifically Genesis Vision, traded as the token GVT. So the impetus behind GVT is that bankers are the definition of middlemen, and time again I see them try to actively manage people's retirement accounts, only to be beat by funds like indexes. Not to mention, they do the best they can to try and hide the details as much as possible, giving statistics instead of trades. So GPT sees this as an opportunity to let fund managers get into blockchain and embrace transparency. Without getting into all the merits, the basic takeaway is this. While the market was essentially sideways in December, the top 10 performers on the GPT platform all made double-digit returns. If you're simply not getting the returns you want in this bear market, I think that's a proposition worth considering. The process is simple. You must utilize the GPT token to invest on the GPT platform. Quite obviously, the more people that are attracted to the platform, the higher the price of GPT is. There is a minimal management fee, which is a welcome reprieve from the traditional asset managers who literally take percentages of people's retirement accounts and then proceed to mismanage them. Another area that I see is ripe for disruption in the crypto markets is the futures market, where we really see one major player, BitMEX, but I think that's about to change. If you've never used BitMEX, first off, it's got a terrible user interface, and secondly, they allow their customers to over-leverage their accounts to insane levels. I think there's a better way, and that's where I see the potential of projects like Digitex, which aims to disrupt that. Digitex is a commission-free futures trading platform, instead having its value derived from its token and the supply and demand on that. They're currently in the process of launching their beta, and I suspect that they'll be launching the full platform sometime later this year. Another area that I see potential value is games on the blockchain and gaming dApps. For example, CryptoKitties and Gods Unchained, two prominent games built on Ethereum, partnered this week to create promotional crossover between them. Between January 17th and January 28th, each owner of the ERC-721 CryptoKitties has the power to create one unique cat talisman usable in the Gods Unchained trading card game. This partnership shines a light on the path forward for games on the blockchain. Ownership of digital assets creates the opportunity for future developers to incorporate your existing digital assets into their games. I don't think it's unreasonable to consider the future trend in front of us. We've all seen how glued to screens young children can be nowadays. Children born today grow up with iPads and quickly learn how to install and play games from the App Store. Some young children even learn to communicate through emojis before learning to read and write. I don't think it's unfathomable to predict that games on the blockchain will introduce a generation of kids to cryptocurrency. Now, speaking of predictions, another method of making money in 2019 is a simple one: gambling, or rather, Augur. Augur is a decentralized oracle and prediction market protocol, and it's that latter bit that we're concerned about. In the simplest way of looking at it, Augur allows participants, known as traders, to speculate on the outcome of just about any event. Obviously, if you speculate correctly, you win money. Incorrectly, you lose money. The terms of that binary are defined by the Ethereum smart contract that Augur uses. In fact, Augur was one of the first, if not the first, ICOs to run off of Ethereum. Augur allows gambling to be trustless because the conditions and payout are done on a decentralized network. But hold on, if that's the case, what's the use of Augur? Why should you use it? Well, normally on gambling websites, there's a very select range of topics to bet on, sports or games, etc. With Augur, anything can be bet on. For example, there was a bet that Ethereum would be over $500 by the end of 2018. Over 2,500 Ethereum was staked in the outcome of that question, meaning that a stake of 1 Ethereum would have netted you 0.35 Ethereum if you were correct. Not a bad return for a little risk and a little foresight. So Augur still needs to net more users, even if it's one of the most popular dApps. We'll continue to see if it can make it and just how popular its ideas can be. Now, there's two platforms that are being built on top of Augur that I want to talk about. The first is Guesser, which is set to launch soon and boasts a 3-click solution for participating in Augur prediction markets. Guesser has been hotly anticipated by crypto social media. Many owners of the Augur token have wanted to use their tokens to profit from making and disputing Augur predictions, but have struggled with the user experience. Guesser is set to remedy that. The second platform, which just launched yesterday, is Veil. Veil is built on top of Augur, and its mission is to help Augur go mainstream. It's doing that in 2 ways. Veil makes trading faster and cheaper. Unfortunately, Ethereum transactions are slow, so Veil uses the 0x protocol to speed up trading and minimize the number of transactions you need to send. The second is that Veil helps you get paid faster. Augur's decentralized oracle system ensures markets are resolved correctly, and it's a necessary component of a trustless network. But the finalization process can take weeks to complete. Veil introduces a feature for supported markets they call instant settlement. That means that you can redeem your Augur shares for Ethereum as soon as the market expires. What's also cool is that Veil is a non-custodial platform, meaning they have no control over your funds or assets. Veil will eventually have millions of markets, but at launch they plan to have the following: cryptocurrency derivatives, where they'll support leveraged versions of Bitcoin, 0x, and Augur, structured as 7-day scalar markets. They'll have Ethereum network hedging products, where they'll offer derivatives to trade on Ethereum's gas price and hash rate, which will be useful for hedging products for relayers to hedge their gas exposure or miners to hedge their hash rate risk. They'll also have Grynn Markets. Grynn has been a hot topic lately, and it's a new scalable privacy coin that has no addresses, no amounts, and is therefore less storage intensive than other privacy coins and digital currencies. Veil will support markets that track Grynn's price, hash rate, and important network events. Finally, they'll also have the Academy Award markets. Essentially, they'll let you trade on who's going to win the 91st Academy Awards in February. So I've covered a lot in this video, and the last point I want to make regarding how I'm going to look to make money this year is regarding investing in yourself. Take the time to identify something that you want to get better at, and work to get just even 1% better every day. Focus on these iterative improvements, and soon you'll find that you've made major strides towards becoming better. In this way, just like how 2019 is a transition and building year for crypto, it will also be a transition and building year for yourself. So I want to know, what are you using to invest and grow your portfolio in 2019? What do you think is going to be the next big opportunity? Let me know in the comments down below, and thanks for watching.